equity, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your investing journey and the barriers that you're facing from beginning to dividend. My name is Bryce, and as always, I'm joined by my equity mate, Ren. How are you going?
I'm good, Bryce. I'm good. It's that time of the month again where we talk portfolio.
Yes, talk portfolio. This is an episode where we're going to be trialing a few new things that we hope will be entertaining, but we'll get to that in a second. Some housekeeping. We do have a listener survey up at the moment. It is currently live on our social feeds. Head to our Facebook page to find the link, or our Instagram. And
or our Twitter.
Or our Twitter.
Or our LinkedIn, maybe.
Yeah, all our social feeds. And it would be really appreciated if you could fill that out so that we can get a sense for what you are really enjoying and not enjoying about Equity Mates, so that we can continue to improve the quality of content and your investing journey over the course of 2021. There is $500 on the line for a lucky person who does complete the survey in full.
Yeah, and look, we've heard the feedback so far in survey responses. You want more Ren, less Bryce. We've heard it. You don't need to keep saying it. Bryce, unfortunately, isn't going anywhere.
No, and Ren's obviously daydreaming because I'm reading something completely different. The survey closes on the 31st of March 2021, in case you are listening to this and you can't find the link. As well, we do have our Fund Manager of the Year competition going, which we introduced in last week's episode. There is a poll currently live on the Facebook discussion group where we have put the 4 experts from the last month, the month of February. We had Hamish Douglas, Emma Fisher, Andrew Brown, and Charlie Violi. We'd love to get your thoughts on whether or not you think they should be standing on the podium at the end of the year for our Fund Manager of the Year.
I feel like we may be pulling. It may be a little bit premature to ask that. It may also be a little bit
month.
It may also be a little bit unfair to the other 3 to put them against the $100 billion fund manager that is Hamish Douglas.
You obviously haven't looked at the results then.
Really? I haven't. I didn't actually even know the poll was there.
Yeah, well, there you go. So anyway, let's move on. Today we're going to be doing a What The segment. We'll be doing, obviously, a portfolio update. Then we're going to be hearing a community stock pitch from Kevin. And we'll be closing out with a new segment, the Specky Hotline, which we're going to be trialing, and we'll appreciate your feedback. So, Ren, as always, well, not as always, but I'd like to start with the What The.
Yeah, a segment that's going well in 2021. Let's play that opener.
What the?
So, Ren, my What The, and this is, again, we don't need any substance to it, but I just thought this was something that caught my eye during the week. We've been speaking a lot about the streaming industry. Hamish Douglas speaking about Netflix, Spotify. There is a ETF now that is specifically made up of companies that are targeting the streaming service, and it's called SUBZ ETF.
Jeez, ETF providers always come up with a good name.
Yeah, SUBZ. I just thought it was fitting given the conversations we've been having over the last few months, and a good way to introduce it to our community if they were interested in following that trend, I guess.
That's not I mean, for me, that's not a what though. Like, that's an interesting...
What the? Interesting.
Yeah, okay. What that can be flexible.
Yeah.
So what, is it audio streaming and video streaming?
So it consists of companies from across the globe who are actively involved in the business of streaming. So it doesn't have to be... so including services such as video, audio, live streaming, and companies that create infrastructure or technology necessary to facilitate streaming.
Cool. That's interesting.
So pretty interesting.
What the?
All right, but let's move on to some more serious parts of the episode, I guess, and that is our portfolio, Ren.
Yeah, now, as we always say when we start these episodes, this is a learning exercise for the two of us, hopefully for everyone listening as well. It is not a buy, hold, or sell recommendation. We cannot be clearer about that. We are not financial professionals. We do not know your personal circumstances. And most of all, you should never take financial advice from a podcast.
Yes.
So we're doing this to learn by doing, and you should always do your own research. And yeah.
So I've just got the portfolio up here, and a reminder to anyone who's just joined the show, we're building two hypothetical portfolios here. One is a core portfolio consisting of a select group of ETFs that will give us exposure to different asset classes around the world. And then the other one is a satellite portfolio where we're having a bit more fun and adding individual stocks. We've also slipped in Bitcoin, and we'll be building that out as we go. We actually haven't added to that portfolio in a while.
No.
And I'm okay with that.
I'm okay with that as
Yeah.
well. Look, so at the start of the year, we were about 10% up in our core portfolio and about 20% up in our hypothetical portfolio after about 6 months. But our satellite portfolio was quite tech heavy, and there's been a bit of a sell-off in the US in those high growth stocks. And that's affected our satellite portfolio. We're now 14% up in our satellite, still about 10% up in our core. But I'm okay to sit in a little bit of cash at the moment. Keep just getting paid every month, saving that money, and just waiting for the right time to buy.
Yeah, so I'm just looking here, Ren, and you are right. We have had a bit of a sell-off. And to your point, we have said that we'll be taking $1,000 a month or $2,000 a month for each of the portfolios. And I agree. I think for the satellite, it's a good time to start building up a bit of a cash position so that should the tech sell-off continue or we see a bit of a fall in the market, we can pounce. But given the strategy for the core portfolio was to continue to just buy in.
The core portfolio is dollar cost average regardless of the weather.
That's right. So this week we will be buying into the fixed income investment, which is GGOV, which is the ticker, and that's the global government bond.
Terrible time to be buying a fixed income investment.
And also the beta shares ASX 200, A200, which we'll be buying into. So again, the strategy there is just to dollar cost average into our ETFs as we go.
Cool.
No
Nice.
emotion.
That's easy. No emotion, not much to talk about. Set portfolio of ETFs that cover the world and a few different asset classes, and we just drip feed money in there for the next 40 years until we retire.
Yeah. Now, we will be shortly after the break hearing a community stock pitch that has potential to go into the portfolio. We haven't made that decision yet because we haven't heard the stock pitch, but we'll address that after the break. However, we do want to talk about briefly two, partnerships that we have.
Yeah. I think the context for this, the most common question in the discussion group is what broker should I use?
Yeah.
Probably the second most common question is what websites and tools does the community use to research stocks and find information about stocks? And it's a good question because there's so much article-based stuff out there that probably isn't as valuable as it should be.
Yeah.
And so we've done a bit of work. We've spoken to a few different people, both in Australia and overseas. And we found two that we personally really like and that we personally are using now. And we've partnered up with both of them. Well, one to give access to the Equity Mates community because it's just been built. And then the other just to sort of tell you guys about it because we like it. So do you want to kick it off?
Sure. So the first one that we like what they're doing, and that is Simply Wall Street. You may have come across it. If you haven't, check out their website, Simply Wall Street. And they really take a whole bunch of analytical information about the company and put it into easy to understand, I guess, and visual ways to understand a bit about the valuation of companies. Now, of course, this is something that we will refer to, but we don't solely use this as our basis for research. They have stocks from all over the world, and we use it as a gauge to understand or help to build out our theses. So, for example, they'll walk through things like executive summary, share price valuation, future growth.
Executive summary. That's as far as you go.
Yeah, that's as far as I go. I don't need anything more than the executive summary.
I think the thing about Simply Wall Street that makes it different to a lot of the other platforms out there is that they don't just try and give the data, they try and take the next step and analyze it and then visually represent it.
Yeah.
So they have these things called snowflakes where they talk about the value, the financial health of the company, the growth, the dividend, and how that compares. And it's like a shortcut for some of the analysis that you have to do as an investor.
Yeah, it's a good place to start to get a view of what's going on. So, it's just a call out that if you do hear us mentioning Simply Wall Street with these portfolio episodes, that's just because it's a resource that we really enjoy using, and you guys obviously don't have to, but we're all about helping everyone in their investing journey. So just a call out.
Yeah, and they've got a free level where you can sign up.
Yeah.
The other one that we're excited about both of them, but the other one is Ticker, and it's spelled TIKR. This is a company based in the US, and they have they're the best source of raw data we've come across.
It's awesome.
So it's often hard to find revenue, profit, blah blah blah, going back years. I mean, like Yahoo Finance has a bit, but there's no great ones. And then, unless you're willing to pay 20 grand a year for a Bloomberg terminal, or, some are in the low thousands, like, the Guru Focuses of the world. But Ticker, we've found, is the best, our favorite in terms of that raw data.
Yeah.
They're based in the US. They're in beta at the moment. But if you want to sign up now, you can for free at ticker.com/equitymates. Otherwise, you can join the waitlist and not sign up through our link, but that wouldn't really make sense. But there's a few things that I really like about it, including they have transcripts of every analyst call.
Yeah.
Yeah. And so you can jump on and you can read, what the company executives are saying and what investment banking analysts are asking these company executives every time the company releases results.
We just did an episode on 13 Fs as well. You can find all the information on the 13 Fs for all these companies. You can find out, who's invested. As Ren said, historical data that goes back many years. And the beauty as well is it's stocks all over the world.
Yeah.
It's not just Australia. It's not just America.
Both Ticker and Simply Wall Street are global. And for me, that's a sort of non-negotiable when I'm looking for a platform. Like, I don't care about just Australian data.
Yeah, exactly. So pretty amazing platform. As Alex said, it is in beta, and we have exclusive access for the Equity Mates community for you guys.
Exclusive free access.
So
jump the waitlist queue, and you can sign up. If you go to ticker.com/equitymates, jump the queue, sign up for free, give it a try.
And that is TIKR, ticker.com/equitymates. So we use a combo of both when we're doing our research.
Just to wrap a bow around it and explain how I personally use both. I find that Ticker is great for raw data to understand what the company's numbers are, and to sort of read those analyst calls, and the 13 Fs look at what big funds are holding. So a lot of that raw data stuff, Ticker's great for. And then I find Simply Wall Street is really useful when it comes to the analysis side and comparing companies in industries and, in markets and stuff like that. So I think, again, just me personally, I use a combination of the both. But it's really, dealer's choice. There's a bunch of different platforms out there, but for me personally, and I think for you as well, they're the two that have really added value for us. And so, hopefully they add value to the community as well.
Absolutely. So that's simplywallstreet.st for their website, and ticker.com/equitymates, TIKR. And look, our attitudes might change as the years go on, and we'll completely keep you updated as they do.
If you're building a fintech out there and you think you can build a better platform, mate,
let us know. Let us know.
Same as brokers, same as everything. Like, we're living in this golden age of retail investing where things that used to be thousands of dollars or hundreds of thousands of dollars are getting cheaper, and we're all for that. So hit us up. But yeah, we'll be talking about Ticker and Simply Wall Street throughout the year, like when Bryce finally comes on and does another stock pitch, when we talk about community watch list, we'll mention them because that's where we're going for information these days.
Before we continue, we'll just hear a quick word from our sponsors. Ren, we are now up to what is fast becoming one of my favourite parts of 2021, and that is the community stock pitch.
Yeah, definitely the best part of Equity Mates in 2021?
It's mainly because we don't have to do any work.
What are you talking about, mate? You never do any work.
That's also true. So generally, we have been encouraging our community to come on and pitch some stocks for the portfolio. However, the volume of stocks coming through and stock pitches coming through is starting to become too much for what we actually want to add to the portfolio.
Yeah.
So we're changing tact here a little and doing a bit of a community watch list.
Yeah.
So we'll be getting as many of the stock pitches from our community as possible and interspersing them just into episodes that we do each Monday, not with the intention to add them to the portfolio.
No.
If it's an amazing pitch and it feels like we can, then we will. But we just want to obviously
what we'll do is we'll take what the community have said and then claim it as our own and add it to the portfolio.
True. But we just want to recognize the work that the community are doing and and give you guys the opportunity to come on and pitch. And so it is without any further ado that we welcome Kevin, a community member from Equity Mates, to the show for a community watch list pitch. Kevin, how are you going?
Yeah, really well this morning. Thanks for having me on.
That's okay. It is early Thursday morning, so thank you for taking the time. I'm assuming before nipping off to work to... well, this is going to be the most important part of your day anyway, so...
The most important part of your week.
Not usually put on the spot like this at 8:15. But...
Now, Kevin, you have actually been wanting to pitch this for a number of months now, and apologies that we've only been able to get around to it now. And I'm hoping your thesis for this company hasn't necessarily changed too much over the past few months. So apologies, but you're wanting to pitch A2 Milk and add that to the community watch list. Is that correct?
Yeah, that's correct.
Nice.
It's probably good that I'm pitching it post the results. It's a little bit cheaper than what it was a few months back.
Yes.
Bryce is really throwing you under the bus with that.
But no one knows I was pitching it a few months ago. We'll just say that. But look, I think the story, is still intact. It's probably one where we just need to wait for, we'll get into that, but overseas travel to start.
Let's put a pin in the thesis. A2 Milk stock close to my own heart for long-time listeners of the show. But for people who are unfamiliar with the stock, maybe let's start at the beginning. Can you tell us what A2 Milk does? Yeah,
sure. Well-known brand, dairy producer of A2 only protein cow's milk and nutritional products, and the well-known infant formula. They own their own IP and breeding process of A2 only protein cows, which are the old Jersey cow. And they're an export out of New Zealand. They have a dual listing in New Zealand and Australia. So it's not an Australian brand, which, is actually in a way quite good given the sort of the tensions that are going on between Australia and China, I guess, well, in the media at least.
Yeah, definitely. And just for people unfamiliar with the A2, A1 distinction, do you want to give us a 60-second 101 on what that means and why it's important?
Traditionally, I think all cows were actually A2 protein cows, and through years of breeding and genetics, the A1 protein has formed throughout a lot of cows. And that's said through research to have some digestive issues. So the A2 protein is easier to digest. People who are not milk drinkers have stated that they've had a lot more comfort drinking this. And they put it in all their products.
I remember, so Ren and I obviously have retail background at Coles and Woolworths, and I'll never forget that period of time where the moment you would put an A2 milk,
it was crazy,
milk powder on the shelf, it was gone. Like just that, you couldn't even fit. You could fill the store with pallets, and it would be gone.
We had to hold A2 milk infant formula behind the counter at the service desk because it was so in demand.
Jeez.
Did you get many customers asking you about the milk?
Oh, so many. The most common thing you would get asked to check if there was any in the back was infant formula, and A2 was top of the list. And I bought A2, second investment when it was less than $1, and I always said when I was working at Coles that my sell signal for this company would be when we could keep it on the shelves.
Yeah. So, Kevin, that's a bit about what A2 does, and no doubt that it's certainly becoming more and more popular as I guess people are becoming more and more aware of their dietary requirements. What else is it about A2 Milk that you like about the company?
It's a premium product. What I love is that I don't think I've ever seen it discounted, which is a really good sign for a company when it's never being discounted. You know, clearly infant formula is their main high margin business and where they're making a lot of their earnings from. But the liquid milk's market share has now grown up to like 11%. So, despite it being a premium product, quite a lot more expensive than other brands, people are choosing A2 milk. I think it's fresher and it lasts a lot longer in your fridge because it's turning over quicker. I've also found. So, you buy 2 litres and it's got a use by date, 1 week to 2 weeks out sometimes. So that's, just something small that I think, is a reason why people buy the milk. Also, China really love the product. So the Chinese want the best premium product, and A2 milk really is that. And you can't just set up an A2 milk only formula company. It takes a lot of science and breeding, and they say it takes about a decade to be able to get to a sort of commercial producing facility.
Yeah. No doubt that the China, I guess, influence is important for this business, but we also know that it can be a risk. You see what happened to Bellamy's and you see what happened to Treasury Wine Estates. So I guess we'll touch on risks in a minute. But what about from a price perspective? We've seen it come off in the last few months. Is this a concern for you, or is this something that is exciting you given the thesis that you have?
Look, like you, I sort of originally got in below $1, but I did do some buying above $10 a number of years ago when I thought that, they'd reached a new sort of platform for growth. So I'm sort of down on that. I'm not necessarily buying more personally at this stage because I feel like I've got enough in and it would just get silly. But for anyone not in, I mean, you've got a company that's market cap 6.6 billion. They've got 770 million in cash. So, really high cash balance. And if you add the Synlait equity stake that they've got, I think just purely on cash and the Synlait investment, it's like $1.30 per share. So I get that there's a lot of risk to China and obviously the Daigou issues, but they will come back, and the brand in China is actually loved. So the infant formula brand in China, the China labels grew at 45% last year. So the issue purely is around just the mobility of the Daigou shoppers, and those shoppers obviously emptying the shelves at the supermarkets and then going and putting that on the Daigou e-commerce network. So yeah, I think it's a company that's profitable, been a lot more profitable in the past, but should get profitable again and maintain that sort of 30% EBITDA margins.
So let's talk about the Daigou and the China story. And for people who are unfamiliar with that term, it's essentially Daigous are shoppers in Australian stores, in other stores around the world that then sell product back to China. And that's been an incredible distribution channel for A2 milk. A lot of Bryce and I not being able to keep product on the shelf was because the infant formula was being bought in Australia and then sold back to Chinese customers or sent back to China to be sold. Trade tensions, COVID, there's a lot of things weighing on that channel, I guess you could say. So how do you think about the Daigou story and A2 Milk's future with that?
They said in their outlook statement, well, for one, to rebuild the segment, they're going to work with the large Daigou distributors and help sort of underpin their business with support. They didn't go into too much detail with that, but I'd gather, helping get them back on their feet so that once travel does begin, they can quickly get into action and start distributing the tins again. One of the threats, I think, is, and what sort of does concern me, is why they haven't put a lot of the tins and powder just direct into China to make up for the Daegu, because clearly the end user is in China. So we would like to see some more information about potentially how they can actually get it into China, as opposed to, losing out on the revenue growth through Daegu in Australia. But, they are positive on, Daegu getting back up and running once travel begins sort of in the latter part of this year, depending on when you think overseas travel will be unrestricted.
Nice. What is the reason that we've seen this price come off because of this Daegu issue, or what's been leading to that? Yeah.
Yeah. So no, look, the price obviously hit a high of around $20. They were growing, earnings at around 40%. Revenue was growing strongly. Early on in COVID, they saw some serious uptick in sales growth, and everything looked really good. But as COVID wore on, the actual performance of the company is being affected by that Daegu, the drop in revenue from Daegu, because that's their highest margin channel as well.
Yeah.
So, you've got total revenue off 16%, but, earnings have come off, EBITDA off 32%. And the margin's been affected, obviously, due to the Daegu channel being the higher margin channel of distribution. And plus, they also made that Matura Valley acquisition of the largest dairy in New Zealand, which they seem to be in partnership with the actual Chinese state facility.
So it feels like it's the price to upside is the play with this at the moment, given that it's somewhat come off, and given the balance sheet that they've got and some of the strategic acquisitions or investments that they've made. Should their profitable channel of the Daigao get back online, then it could be rosy again for A2 Milk.
Yeah. Look, I'm reading some of their latest earnings call on Ticker at the moment, and the company's very aware of it. Like they're talking about how they understand that their business was built through Daigou. They're talking about how they're trying to build a corporate Daigou channel as well as the retail one, as well as throw significant resources at their China labeled direct business. Like they're committed.
Yeah,
they understand where their bread was buttered for the past 5 years. So I guess it's just, can they execute?
Yeah.
Hopefully the travel opens up and Daegu gets back up and running. I don't think it'll be any problem, but until it happens,
you just gotta hope that Jacinda Ardern keeps on China's good side. If she starts butting heads, then all bets are off.
I was just saying, well, New Zealand, I think agri is the largest part of their economy, so she probably will keep on their good side, I would think.
That is unfortunately all we have time for this morning, Kevin, but very much appreciate you spending the early hours of a Thursday morning before work chatting through stocks and sharing your thoughts on A2 Milk. We will add that to the community watch list, and keep an eye on the progress with this Daigao, because if it does take off again, then who knows what's possible. But thank you very much.
Thanks very much.
Thanks, Kevin.
Thanks, Bryce. Thanks, Ren. Bye.
All right, so before we jump into the second half of the episode, we'll take a quick break and hear from our sponsors. Okay, Ren, so we have introduced a couple of weeks ago a new segment called What The, and now it is time for another new segment that we're introducing, which is the Specky Hotline with Specky Macgee.
Yeah. Look, we hear some in the Equity Mates community love talking about speckies,
which are speculative stocks.
Yeah. The micro cap stocks that
highly volatile,
highly risky,
anti-us.
But have the potential for big returns if they come off, but also have the potential to go to zero. And so, look, we're all about long-term investing here, and playing the Specky game isn't really in line with what we want to do. But we figured let's have a bit of fun with it. We've got someone from the community.
Well, I mean, he's not someone from the community. He's a mate.
Oh, he's also from the community.
Well, and he's from the community, yeah. He's a mate who just loves taking silly pot shots at stocks.
He sucks on group chats because he just will pick the most random nothing stocks A lot of them won't pay off, but if they do, he'll tell you about it. But anyway, look, we got to say before we start this segment, obviously nothing on Equity Mates is a buy, hold, or sell recommendation. Never take financial advice from a podcast. Do your own research. But never is that more true than in this, what are we calling it? Specky Hotline.
Specky Hotline.
If you buy based on whatever you hear in this segment, then we obviously haven't done our job well enough here at Equity Mates, because you need to do your own research. You should not be taking advice from a podcast.
No.
So
No.
Every time we do this segment, I'm going to stick that caveat in there.
Sure. So we will we'll play the opening for the Specky Hotline, where we're going to call Specky Macgee, and really what we're going to get from him is hopefully a bit of a lay of the land of the Specky scene, and I think he might have a stock on his watch list.
200,000 shares Blue Star at 19.5. Can you position it in one of your equity funds? Listen, Blue Horseshoe loves Blue Star Airlines.
Hello. You've reached the Specky Hotline.
Yeah, Specky Macgee. We've reached the Specky Hotline. First time we've reached the Specky Hotline here on Equity Mates. So looking forward to this one.
Yeah, Specky Macgee, how's things?
Going well, guys. Just looking at the market, a bit red in the US overnight, so I don't know how that's going to bode well with my Speckies. What do you reckon?
Mind you, we are recording on the 4th of March, and so I think things were a little rocky over in the US, and given your focus on very short-term speculative trading, that is an issue for you, but not an issue for us.
But you wouldn't care about how the indexes go, because you only care about Specky microcaps, don't you?
My flavor of the month is ASX microcap. And that's the one I've got for you today, boys.
Okay. What do we got?
So we're looking at iCandy Interactive, stock ticker ICI. Blue Horseshoe loves iCandy.
Do you say we as if you have a team around you?
Yeah, how many analysts have you
There's
got?
3 of us on the line here.
That's true.
All right, so
iCandy.
Specky, tell us about iCandy.
Okay, so it's a mobile gaming company. So they manage a portfolio of mobile games. And that's pretty much what it is at its core. It's small, trading at 12 cents at the moment, with a 68 million market cap. So we've got a lot of upside here, boys.
Yeah, if Apple's 2 trillion and this is 60 million, so much upside.
Yeah. What's 2 trill divided by 68 mil?
I don't know, mate. We didn't get into this to do maths. All right, so it makes mobile games. Bryce is a notorious mobile gamer. A lot of
well, Ren, it's funny you say this because, and I hate to admit this because it does pump up the tires with Specky Macgee over here, but I have looked at iCandy before.
No.
In fact, I think I'd
Here
had.
we go.
In fact, I think I'd had discussions offline with Specky Macgee about
so
iCandy.
you told Specky Macgee
No.
about iCandy.
I think months ago we spoke about it. It may have come across Specky Macgee's desk, and he mentioned it to me, and I kind of liked the look of it, but didn't pull the trigger.
Right,
Am I
okay.
right there, Specky
Yeah.
Macgee?
Well, we haven't met before, right? This is a private line. This is a private number. I don't know how you got it, but we'll continue.
I think Bryce has been doing some sneaky calls to the Specky Hotline when I'm not around.
Yeah, it hasn't paid any dividends yet, but
So, Specky, tell us, why do you like this company? I'm sure there's a bunch of companies out there making mobile games. What is it about iCandy that you like?
Okay, so Alec, if you're looking for proper DD, you're
we're
calling
not
the
going
wrong
to get it.
Oh,
Yeah.
really?
Yeah. No. That's not why we're
Have
here.
I missed the point of this
Yeah,
segment?
That's not why we're here. This is short and sharp. It's just a company and what's going on in the Reddit scene. Yeah, we're not getting DDs. and shit.
Okay. Hey, Specky, I apologize.
It's okay. So look, the theme is good for me. So mobile gaming, low marginal costs. All it takes is for one big mobile game to take the market by storm. You know, Alec, you're a big Candy Crusher yourself, so you can sort of see just how quickly and rapidly a game can just go bonkers and bring in revenue. So that's what it is. It's high risk. It's will iCandy find the next Candy Crush. Sorry, I'm getting my candies mixed up here.
That's okay.
Candy Crush, Clash of Clans, Angry Birds, anything like that. And we might be mooning.
So mooning. That's what I like to hear. We like some mooning. So the other thing before we wrap up, Specky Macgee, is that you obviously have your finger on the pulse when it comes to the Specky community across Reddit and other dark web sort of communities that you're involved in. So is iCandy trending in these communities? Is there much going on?
So that's the interesting thing. It's not actually trending right now, which is why I think there is a bit of potential, because it's not just.
There's a lot of stocks that aren't trending right now.
No. Okay. Okay. So I'll start by saying there is an ASX Bets Reddit page, which is quite interesting if you're keen on reading a bit more about ASX speckies and that sort of thing. I'm sure you guys have talked about the Wall Street Bets GameStop saga.
Absolutely.
Which is just, inherently very fascinating. So if you're interested in reading about what's going on in the ASX speckies community, I would check that out, as opposed to some of the Facebook groups.
Like the Equity Mates
which you read a lot of nonsense. That one's okay.
You would be I was just going to say you would be a moderator of ASX Bets, wouldn't you?
Not quite. I'm trying to be. But the other thing about iCandy is it's got a relatively high REI at the moment.
What's an REI?
So that's the rocket emoji indicator. So that's the amount of rocket emojis.
Okay, that's good. That's good.
Is that a proprietary metric run by the Specky Hotline?
Yeah, REI.
Nice. Well, we have truly heard it all. Well, Specky Macgee, unfortunately, that is all we have time for this morning. But I think there's a throw out to the community that if you would like any of your Speckies to be run past Specky Macgee to get his thoughts on the REI, the rocket emoji indicator, or whether or not it's trending in social circles online, or if you'd like him just to continue with the deep dives and quality discussion that he's brought this morning, please hit us up on our social channels, and we will ideally we'll give him a buzz maybe once a month and check in on the Specky scene. Any
Speckies we'll pass on, and he'll if he's got time, he's got a lot of Speckies going across his desk, but hopefully he'll be able to feedback an REI for that stock. A lot of
Speckies going across his desk. So we got an iCandy Interactive this morning. The ticker is ICI on the ASX. This was absolutely not a buy, hold, or sell recommendation. As you can hear, there was no substance to any of that.
And look, with a lot of these community watch lists and stuff, we say we'll make a page on our website to track them. We're explicitly saying we will not be making a portfolio of the...
We might do it offline.
Of the Speckies that we discuss in the Specky Hotline.
Thank you for having me. Thanks for the wrap up. I understand it's time to wrap it up. And I just want to say, don't actually buy this stock. It's not a recommendation at all. Speckies are inherently stressful and risky, so I wouldn't recommend it.
Yeah.
However, just before I drop off, I just want to play to you guys a bit of analysis I came across by equities analyst Aaron Carter on iCandy. So that's going to be my finishing moment. So this is what he had to say.
Oh, wow.
Unbelievable.
Look, aside from the fact that I completely misunderstood what we were doing in that segment, I thought that was great. We actually got an Instagram DM that we should be more serious. So we've definitely pissed that person off.
Yes.
But hey, look, like we enjoy talking about stocks. And literally that's what he's like in our group chat. So,
well, that was the Specky Macgee Specky Hotline. As we said, if you'd like him to give some quality analysis like that, then please hit us up on our socials. But Ren, to close it out, a reminder that we do have Meet, Pay, Love, which is one of our new podcasts, which discusses the money side of relationships, and Comedian v Economist, which unpacks the world of macroeconomics. So go and check both of those out, and don't forget about Get Started Investing as well, covering the fundamentals of investing. But Ren, that brings us to the end. Always good to chat.
Great
Entertaining
episode,
end.
yeah.
Yes. And we'll pick it up next week.
Sounds good.
Thanks for listening to Equity Mates Investing Podcast, a production of Equity Mates Media. Please remember that everything you hear in Equity Mates Investing Podcast is general advice only. The content has been prepared without knowing your personal objectives, specific financial circumstances, or goals. The hosted Equity Mates Investing Podcast may maintain positions in the companies discussed. Before considering any investment, please read the product disclosure statement and consider speaking to a licensed financial professional.